In this episode, Ryan and I discuss the simplicity of the infinite banking concept, the complexity of the current financial construct and paradigm. We hope you enjoy. Thank you for listening. Welcome to the Banking with Life podcast. My name is James Neathery, your host.
I'm your co-host, Ryan Griggs.
The well-written and published, increasingly more published co-host, Mr. True. Ryan Griggs. Mm-hmm. And so we just decided that we're going to talk about a couple of things.
Yeah.
Simplicity and whatever else comes up.
Simplicity. So you gave a talk in the past at is that a think tank, right? Nelson Nash Institute think tank. And the title was something to the effect of, this is ridiculously simple.
Ridiculously simple, which I didn't, I got that straight from Nelson. It's ridiculously simple, the infinite banking concept. But yes, I did.
And so that's come up over the past week. We get a lot of questions. I certainly have a new client on the East Coast who...
One? You got one new client?
This one in particular. We had a series of, I think, 4 different phone calls, and each about an hour long.
How do you have time to write?
I don't. And that's standard. Maybe some people take less time, some might take more, but a lot of questions to get through.
Sure.
I think when people first get started, they can feel overwhelmed by what they perceive to be the complexity or the complicated nature of infinite banking. And you got to learn about premium payment and what's cash value and all this stuff. But I think if you talk to somebody who's been doing infinite banking, the way I describe it is like riding a bike. If you've never ridden a bike before, that looks complicated. But if you've ridden a bike, well, it's like riding a bike.
Right.
I mean, super simple. But I wish it would be convenient if it were easier to convey the simplicity. I think the reason that most people who are just learning about infinite banking or just learning about even dividend paying whole life is that they're still stuck in that old conventional financial paradigm of let's think in terms of rates of return, analyzing financial assets as if they're investments. Still run across this. We've only been talking about it for a few months, I guess, like really pounding on it.
You mean on recorded?
Yeah, in podcast form.
Yeah.
Right. So that go back to the talk I gave in February at the 2019 Nelson Nash Institute think tank about capitalizing, saving versus, as opposed to, as distinguished from investing. Right? So we still run into that, and I'm sure we'll continue to. But I think that's really the problem: is that if you're approaching infinite banking and you're not aware that there's a sort of a theoretical structure, a way of thinking that is not absolutely necessary, but it's just what out there. It's the dominant paradigm of how to think about money, of how to think about financial assets. If you're not aware that there's a certain preset, conditioned, programmed way of thinking about money and finance out there, and then you try to fit infinite banking into that, then it's going to appear complicated. And I think you can get stuck all day. And I think that's why individuals can have so many questions. Not that having questions is a bad thing. That's not what I'm saying, but it's going to be more difficult to fully understand infinite banking if you stick to the conventional financial analytical paradigm, I think.
There's a lot there to unpack.
Yeah.
So and I agree. I'm sorry.
Say get to work.
Yeah, get to work. Well, let's talk about industry jargon for a minute.
Okay.
Life insurance. All life insurance is life insurance. Not true. And the advisor, the agent, and sometimes there's not distinct clarity and differentiation between types and types of life insurance. So that doesn't bring clarity. Right? Yeah. Coming from the typical construct of the financial world, agents, advisors are trained in a particular way, assets under management, and sell, and then there's the need-based selling, and then there's all kinds of sales, marketing theory and product and systems and things, and so the consumer too has typically, look, we're all born into a construct. That's not by choice. Part of that construct is a financial construct, and we're surrounded by the noise. All of us can't get away from it. You have to diligently pay attention, be able to properly classify things and recognize the noise. So that takes effort. So, there's the industry construct, the financial world, Wall Street creating all new products to attract capital and charge all the fees to sell, and then to manage, and then to short, and then to repurchase and recycle, do it again. I think the average all-American, financial agent, advisor, their hearts are in the right place, and they've got to go through all of this learning, and they're trying to do the right thing for their clients. But they are still trained in a construct.
Yeah.
Okay. All right. Then the consumer has a construct. Well, the rate of return. You mentioned it, just using the terminology of investment, classifying life insurance as an investment is wrong.
Yeah.
Life insurance is not an investment. It's wrong whether you are a life insurance company, a life insurance agent, a consultant, I don't care who you are, using, and it's all in love, right? Love, peace, and chicken grease. Life insurance is not an investment. Even the Internal Revenue Service can recognize that. Okay.
So the bar is low.
So, I didn't say that, but I don't disagree. Okay, so words have meaning, words have power, so we should, and I'm not perfect, but we should all, try to convey and have a conversation with clarity.
Yeah.
So I'm just saying that there's a lot to unpack there. You have the industry jargon that the advisor has to learn, and then they master, and then the consumer, it's like speaking Greek sometimes, and so they have to understand or know what some of the industry jargon is, and you have the construct, the consumer that we all are born into, that the agent willfully and advisor willfully engages in because they want to be of service, right, to the community. So they've got to go through all the construct from the insurance world and the investment world, and then you get into simplicity. If you read and listen to Nelson Nash, it's simplicity, right? And the more fragile or the more complex something is, the more fragile it is, right? Complexity increases, fragility increases. It's so simple what Nelson did. So cutting through all the noise, learning some of the jargon, unlearning some of what we have learned, discarding some of the things that we think we know that just ain't so. So it's not like it's an easy task to sift through all that, but there comes a point in time going through learning the infinite banking concept, learning about life insurance, learning about the infinite banking concept, comparing it, analytically to all the other things that you can do with money, will wear you out. It will wear you out.
So as you were going through that, something came to my mind. First time I've ever made this connection. I want to lay it out and you tell me what you think.
Okay.
All right. So you mentioned assets under management and the construct that financial people are embedded within, whether they know it or not, right? So most financial agents, they start out, they might work with what's called a captive company, right, where they're might technically be an independent contractor, but it sure looks a lot like employee.
So they get a 1099, but you can't do anything outside of there.
You're told where to be, when to be there, what to say, how to say it, right? The whole presentation script and all that. And then it's like, did you say that word? Very, people understand it. It's so fine-tuned. The sales presentation in the conventional industry is extremely fine-tuned. And like you said, the people are we assume angelic intentions, right? They've got the best intentions possible, right? And usually that's actually true. They really do want to help.
Right.
They just don't realize that there is a broader strategy that, there's a reason why the sales concepts are what they are, and why things like term or various versions of universal life and the mutual funds are all pushed. There's a reason that the presentation is packaged the way it's packaged.
Somebody's getting paid.
Right. Yes. And we beat up the industry a lot because they've got the tool, namely dividend paying whole life, that could help people retain and maximize control over capital, right? But at the same time, even though they have access to that tool, they can provide it to people. It's the last thing, right? The industry doesn't understand infinite banking. They're not out there promoting this way of thinking. They're indulging and engaging that conventional mindset that people bring to the table. Right?
Actively engaging, being part of the problem.
And look at assets under management. Your assets under their management, right? It's right there, front and center. Our goal is to acquire control over your capital, right? That's the whole point. And so no wonder people, the individuals working hard, trying to do best for themselves and their family, who has formed a relationship with a financial advisor, no wonder that person finds themselves without access to capital under their own ownership and control. No wonder they're exposed. I mean, duh,
well, listen,
right?
Get out of debt, pay your house off.
Yes.
Put all the equity in your investment program, which is typically a traditionally qualified retirement plan, and pay your house off. I mean,
sure, that whole program.
The majority of the average all-American family's assets are in their primary residence and their qualified retirement account. I'm not saying that that's good, bad, or indifferent. That's just the way it is.
Right. So there's that overarching structure, right? The assets under management program. The goal is to separate you from control of your money. Period.
Yeah, intentionally? You mean the industry got up, Wall Street woke up one day and said, let's separate our clients from their assets?
I'm sure they don't put it that way, but, well, that's not, a quick little side note. I did have a conversation with an agent who works for one of these fraternal life insurance organizations.
No, you mean a fraternal organization
association that happens to own a life insurance subsidiary, one of those things, right?
Okay.
And
there's a difference.
This individual was telling me that they had a call. I forget what the exact. It was like a company or agency wide call, training program, right? On video, right? Skype or Zoom or whatever, where the whole that was the point of the call was what they said. It was. I think it was capitalization versus utilization, right? You should be utilizing your money. If you're not utilizing it, or if you're not getting it in the market, then you're just sitting on it. You're not. That's an opportunity that we can exploit. We want you to be utilizing.
Did they use the term exploit? Do you know?
No, that's probably
I'm just asking
my embellishment. But I do remember utilization. The idea was you ought to be using your money rather than just building it up, right? Rather than just accumulating capital, right? We need to build up your capital, not you.
We need to utilize it, right? So, well, if I can interject here, and I don't know, and you don't have to answer, but there's a couple of fraternal organizations out there, one in particular that has fully embraced the infinite banking concept in the past, and then they discovered that maybe they don't want to embrace it as much as they thought they did. And so they're going heavily after assets under management with their other subsidiaries. I don't know if it's the same one. I don't even want to know if it's the same one. Not surprised. Okay.
Anyway, so where I was going with this is that the subject today is simplicity, right? And I want to make sure to distinguish between simplicity and clarity, because I think a lot of the people who come from the traditional financial advisory analysis world, right?
I would interject people,
the typical, the conventional, right, run of the mill. They want simplicity in infinite banking so bad that they're willing to sacrifice some of the important nuance, right? And so we end up losing clarity. So infinite bank, and I think that's why there's these people out there that where you get the idea that infinite banking is a gimmick.
And it's very complex.
Yeah, and it's presented
the more moving
as this,
parts and utilization, and the more,
and I'll go ahead and say this. Maybe we need to present people with the 12 steps to understanding infinite banking, or the 13 steps, or the 27 steps. I don't know why there's any particular number, but there's these programs out there, right?
How about the top 10 life insurance companies to practice infinite banking with?
Yes.
I mean, while we're talking, people like numbers, right? We all want simply just give it to me in the 3-step process.
Oh, this is good.
Okay.
We're going somewhere with
and
this.
And specifically, and of course, I'm not a writer. Okay. I mean, I can write. I can surgically. I don't write as much as I should. Okay.
We forgive you. It's okay.
Okay. My point being that it's something along those lines I've seen and couldn't read through it, I assure you, but 10 best life insurance companies to practice banking with, something like that, or along those lines.
So a blog post trying to say, look, this is the list of the companies that you should use if you want to do infinite banking. And if you don't, you're an idiot.
Right. The implication. And you read off those top 10 and you're thinking, well, is it because you have a contract with those 10, or why specifically? And then if you look into their research, where did you get that? And if you follow down that rabbit hole, I printed this part out. I haven't. And it'll say, well, we're relying on other things that we found on the internet, other people's opinions and blog posts and message boards. And I'm like scratching my head. Well, it makes sense why those 10 made the top 10.
It's like, no.
I don't know. Maybe that's an easy, clickable, clickbait kind of thing. Yes. Top 10, top 3, top 5. And not that I think I have a top. I don't know that I have a top thing out there. Video in the past, 6 benefits of a whole life. I mean, yeah. I could have continued and made that longer. I'm just saying, but
so I like where this is going. I think this is good. The reason that there's false information on blog posts out there, the reason that there's these sales programs that are pitched either to individuals or to agents or to both. They're out there because the providers want to simplify, and they need to simplify the concept instead of just reading the book. Because they're operating from that traditional paradigm.
Typical.
And that's why you get the people who say, invest in whole life. Oh yeah, you can call investment, or you can call whole life an investment.
The best
whatever you want to call it. It's like no, you can't do that.
I don't know. You're assuming angelic intentions, and I love that, and I learned that from you, right? I think that there may be just as much out there trying to complicate it. Oh. Okay. I don't know that, and maybe the complication is unintentional. Maybe they are trying to simplify it, but then, my gosh, it gives me a headache.
Yes.
Reading. I can't even read and listen to most financial jargon. Can't do it because
just no thank you.
So I think maybe you are correct, and I'm not disagreeing at all. Maybe they are trying to simplify, but through the lack of understanding, or maybe some ignorance, and there may be some malintent, but I'm assuming angelic intentions. Through the simplification process, it becomes overly complicated, and then when you look at a lot of the results, I'm just thinking, oh my God, that's complex, and that's completely fragile.
That's good.
No, I mean it is. Where at the end of the day, Nelson simplified. And it was so just straightforward, Southern gentleman. He spoke plain English with a cool accent, and he was right? In whatever analogy that he would use or question that he would ask, and it was very simple.
Mm-hmm. Simple yet articulate, right? I think he had gone so far. So there's two competing paradigms, right? There's what you can call the Nelson Nash way of thinking about money and finance, and then there's everything else, right? And I think Nelson established that alternative paradigm, and then did the most of anybody ever to most specifically, most clearly articulate how that looks, right? What that paradigm looks and feels like, you know, talking about, and that's why he took the parable. I mean, I'm not trying to put words in his mouth, but that's why there's a parable approach to conveying the concepts and becoming your own banker. He's telling stories.
That's biblical.
Right? Yeah. He's elaborating an entirely new paradigm, and I think that's also why a lot of people who, especially those who have been in the industry for a long time, not everyone, but individuals who have been in the industry for a long time might read the book and go, oh, this is hokey, or oh, the language isn't, you know, as complex or complicated as it should be.
Listen, if you're going to pick on the industry, I want to throw the Austrians and the libertarians and all the economists in here as well.
Oh gosh.
Okay, because when you say there's Nelson and what he did and you know, and then everything else, I mean, he had a background in Austrian economics.
Yes.
Okay, and so I just don't want to leave those out.
Oh, that's a whole nother, yeah.
And two, you're very articulate, and I appreciate that. He was very articulate. I said the same thing when I said he had a Southern drawl and a Southern gentleman with clarity and simplicity.
Yeah, and the word for that's articulate. So
that's the academician. Yeah, no,
but you're so right. So the Austrian stuff is a whole part of it. Right, that's the backdrop to this particular Nelson Nash IBC style of thinking about finance. Right, that's the economic background. Whereas, lo and behold, coincidentally, no surprise, the economic background behind the conventional, traditional financial paradigm is amalgam of neoclassical and Keynesian. We'll use nice words like. There's an organization out there that gives the designations, right? All the various things that you can be called when you're in the industry. There's one particular college, won't say which one, that gives these designations, and they've got a curriculum, right? And they've got professors. They have normal courses like you'd expect at a college, and you can see what the textbooks are, right? I mean, Nelson used to talk about how when he did his chartered life underwriter required education, he had to read Paul Samuelson, who was a communist, who explicitly endorsed the Soviet Union just before it collapsed. I mean, so maybe they've updated the textbook.
Economics.
Yeah, but they're still in the same lane, right? So there's the whole structure, and that's what really irritates me when it comes to the Austrians is we've totally given up, or we've done so little to inform the financial analyst. The financial professional. There is no financial economics from an Austrian perspective.
Well, now you say that, but
outside of what Nelson did.
The CFA designation, which you normally have a CFA when you're managing portfolios, you know, so that you have a lot of designations out there. That's a pretty respected and sought after and highly recognized designation. I understand that they've added a course of Austrian economics about 3 or 4 years ago into that program, which didn't exist prior to that. So they're making progress.
Yeah, that's like people say, you know, it's now's a better time than ever to be an Austrian and try to be an academic. It's like, no, I just don't.
Well, I just, you know, this is April, right? I'm just saying that.
This is certainly not April?
Just August. Sorry.
The year's gone by really quickly.
Well, okay.
August 2019. Yeah.
August 2019. The Austrians and the libertarians need to smoke a few more cigars and distinguish between Cubans and others. Okay, not that there are no other good cigars in the big wide world other than Cubans. And yes, Cubans are made in a socialistic state. I get it, but it has little to do with that, right? It has to do with the altitude and humidity in the soil. I get it, and the tradition and the history. But don't comment on cigars unless you've smoked several, in my opinion. Unless you're just sharing, you know, it's like, hey, I don't know, this may be good, this may be good.
This is hilarious. If you're watching this and you understand that reference, then you're ahead of the game. That's
right. And I love you all. I'm not kidding. I mean, I'm just saying, I don't want to hear a libertarian talk too much about the infinite banking concept, and I don't really want to hear him talk about cigars. Now they can, you know, paint the world with alcohol. They can talk about alcohol all day long because That's all.
All right, so backing up a little bit. So there's a clear distinction between like the fundamental paradigm that Nelson Nash brought to thinking about money and banking, and then there's the dominant financial industry out there that you can, assets under management is one of the particular keyword phrases that you might hear associated with that. But I think my point here is that that's not even understood, that there is a distinction, that people are trying to come from they're trying to understand infinite banking and fit infinite banking into the conventional financial analytical paradigm. So like for the individual, for the person who's thinking about doing infinite banking, my encouragement is just to reflect on that, right? Like think through things like assets under management. Like, well, that's kind of weird. How about, shouldn't I have control over my assets? Like, how about they're under my management, right? And the more you think of it, that's just one example. And the more you think of the incentive structure behind the industry, how most financial people get paid, right? The fees associated with the different sorts of managed money portfolio kind of deals, the thickness of the prospectus and the mutual fund that you're investing in through your 401k, right? These things this isn't just complicated or, it seems difficult to understand. Like there's a reason, right? My point is there's a reason for why so many things just seem weird. And you've got to, if you can see it, Nelson, right? If you know what's going on, you'll know what to do, right?
And once you see it, you can't unsee it.
You can't, yes.
Oh my gosh.
Oh my gosh. Yeah.
Okay. So are you wrapping that up for us?
Well, I think the learning process would be easier for people if they could become aware of that there is a conventional paradigm out there that is not conducive to infinite banking, that doesn't understand capital or the importance of it, that doesn't understand the cost of dependency on third-party capital, willingly or unwillingly. If you become aware of that and then exit from it and just be willing, have the humility to back up and be like, okay, let's start over.
Well, how would they do that? How would they become aware? How would they learn?
I still think you're just reading Nelson's book, and first you have to have the initial willingness to say, okay, something deeper is wrong here. Let me back up as far as I am aware that I'm able, and let me approach becoming your own banker and Nelson Nash and infinite banking with as open a mind as possible. And then maybe things will start to fall together a little more. One last thing, I think that's why other people who, even in infinite banking, who took a long time to wrap their mind around the concept, took as long as it did. Right, and everybody has their own, rate of progress. That's fine, not beating anybody up. But I'm saying that I think you can understand infinite banking and see what Nelson's vision was if you're willing to step back and say, okay, maybe there's something deeper that's wrong here in the financial system.
I agree with that, and let me also. I think most of the people that I speak with, they're really coming from that. Point that there's something. Everybody knows there's something fundamentally wrong in the economy. It may be at different degrees and levels, but the majority of the people that I speak with, they know that what they've done or what they've been told is not necessarily been their experience, and so they're willing to look at Nelson's work and his concept. Get past the word life insurance, but we're still in this noise and we're still in this construct, and so it's harder to continue down that road if you don't get past the word life insurance. And what I mean by that life insurance is not an investment, and the whole financial typical construct is always looked at life insurance solely for the death benefit. Samuelson and Nelson had their interactions about that in particular. And I'm not negating the need for death benefit. I think if you have responsibilities, or you're a philanthropist and you have causes it or near and dear to you. You know, a death benefit is needed, required, what have you. Once you get past that, now
boatloads of it anyway.
You know, and I've said it, and I'll say it again all the time. I say it all the time. You typically wind up with more death benefit at natural mortality when you solve for cash value with the infinite banking concept. I mean, that was a real. I didn't learn that until 20 years in the life insurance industry. And anyway, okay, you got to continue moving past the financial construct. Okay, so I think when I typically talk to people, they know there's something wrong. They're open-minded, and they want to learn. It's intriguing. They want to discover the infinite banking concept, vet it out to see if it's right. But you have to keep going because we're still surrounded in this noise, right? In this construct.
Well, some don't. You run across
some don't.
Yeah, you run across some people. Sometimes you're like, well, this will be a 10% part of my portfolio.
No, that's exactly what I'm saying. You've got to continue, because once you just are, and Nelson used to always say, this is more caught than taught.
Oh,
right.
And so
once you get it, and once you're exposed to the idea of the infinite banking concept, and you start reading Nelson's book and some of the legitimate ancillary works, and that takes a lot of them off the table. Okay. And you focus on the simplicity there without being complex and trying to avoid the complexity until the simple foundation makes sense, because it'll either make sense or it won't. And if it doesn't, okay. Yeah. But if it does, you've got to continue going, and then you have to shed that that idea of internal rate of return. Not that there's not an internal rate of return. We've talked about returns and how the infinite banking concept is actually utilized by the owner and everything that they're doing. And of course, this is not the only thing that most people do, and it's not the end-all, be-all solution for everyone. So my point is, you have to keep going.
Yes.
Okay. And some of this baggage, it's not like it just falls off because you read a book. Or it doesn't just like, oh, okay, I paid a premium, so now I'm fully understanding, and I'm still surrounded by the noise, and it's not affecting me. Not true.
Right.
So
no, that's good. So one of the questions you asked earlier was, okay, well, how can someone go about making this switch and understanding,
going down the path of learning and educating?
Right. So we talked about being aware that there is a programmed structure out there about how most major financial institutions approach your financial situation, right? There's a certain orientation, there's certain goals they want to accomplish. A lot of that is encapsulated in that assets under management idea. It's about getting your capital under their management, right? All sorts of problems flow from that. So being aware, step one, being aware is helpful. 2, approaching becoming your own banker. Nelson's first book, 5th edition, hardcover, black, right, on Amazon. Approaching it with as open a mind as you can manage.
Or at bankingwithlife.com.
Yeah. Okay. And being willing to follow where he's going with the stories in becoming your own banker. And then I think what you were getting at just now, what you could say is like number 3, is continue to surround yourself with the truth.
Oh, and people that speak the truth.
And don't knock repetition, right? Sometimes you hear one thing, it's like, okay, Ryan, you're beating up capital versus investment. Yeah, I am, and it's it's not stopping. And
he enjoys it, so we'll continue. Right.
And you can't get enough of it. Okay. There's this one pastor. I think it's. Do you know him? Is the title? If I could go into YouTube, type, do you know him? There's a particular pastor. I think he's passed away now, but he gave a sermon one time where he's like, "Don't knock repetition." Like, people had given him a hard time for repeating the same lines in sermons, and he's like, Yeah, and you need it, but really, don't not. We both continue to reread Becoming Your Own Banker. The people who are in it, surrounded by it all the time, we're still refreshing, right? Consistently renewing your mind, right? I want to get the exact scripture wrong, but there is a need to continually surround yourself with further articulation, further clarification about the concept and the truth, so that it sticks, right? So that when the brother-in-law or the mother-in-law or the cousin or the uncle,
the financial expert,
your best friend who's been a life insurance professional for 20
everybody's
years.
Been licensed.
Yeah, everyone who's going to beat you up for paying how much money in premium to what, whole life? What?
Do you know what that guy makes in commissions? What company?
Yeah, exactly.
How'd they fare in the 08, 2000?
So it's going to happen.
Have you seen what the market's doing lately? Yeah. Have you seen Bitcoin, gold, silver?
I'm paying this much premium. Why? What?
But you're paying $700 a month
go buy a car?
4% interest.
Oh, I could get a better rate. The mortgage lender is giving me 4.5. Why am I going to borrow at 5?
Right. Because you want to.
Anyway, okay. Those are some steps. And then look too.
Maybe you want to. I don't know if you do or not.
I don't want the impression to come across that we're just saying this because it's convenient, because we're in the business or whatever. Look, if you want to get into the legit theoretical economic implications of why these two sets of thinking are different, we can do that all day.
Yes, we can.
We can do that.
You want to do it now or later?
No, I'm just saying we're not making this up. It's not just something that we invented. There is a legitimate distinction, theoretically, conceptually, from what you would do day to day, how you manage your money, all the way down to an understanding of the economic system. Right? There are two distinct ways of thinking about money and banking, and we can make it as technical as you want. We can do that, but look, infinite banking is simple. If you're just willing to back up, approach becoming your own banker with an open mind, be willing to change how you think about money and finance, and genuinely, authentically follow Nelson's vision, I think maybe you'd be interested in the history of intellectual thought behind the idea of capital, and maybe we can have that conversation. But maybe not, and not everybody needs to, right?
Some people love that, and some people don't. I do. If you do, perfect. Yeah. Well, I think that
that's a lot, man. I just want to say, nobody else out there talking about this.
That implies that you're listening to other people.
Yeah.
So no, tell me. I mean, I don't. I mean, I do. Don't listen. I listen to a lot of people, just not.
I just think this is a unique perspective.
Listen, I'm having fun, yeah. But I got to say too that the more complex and complicated things look like. I mean, it's when there's in the infinite banking world, presentations, talks, discussions, message boards, whatever, how to get out of debt, and velocitize this and velocitize that, and I understand the velocity of money, and it's a legitimate financial term, and of course, but when I see the infinite banking concept being conveyed in my opinion, in an overly complex way, I'm just thinking, my gosh, that's so complex, and fragility comes to mind, and I'm just not. I can't take it. I got to walk away, shake my head, and I know Nelson would say, "Well, God bless them. That's just where they're at." Yeah. They don't know what you know, Ryan. They don't know what you know. That's where they're at, and I want to be just like him.
Right?
It's like, God bless them. That's just where they're at. But it doesn't have to be complex, and it shouldn't be complex. And he 4 simple fundamentals.
Mm-hmm.
Think long range.
Mm-hmm.
Don't be afraid to capitalize. Don't steal the peas. And then don't do business with banks outside of checking and savings. Then in the last few years, he added the 5th, rethink your thinking, which is exactly what we're talking about.
Mm-hmm.
For the financial advisor, agent, being able to recognize the construct and your part in it. Us as individuals being able to recognize the construct and our part in it.
Mm-hmm.
Properly classifying. So if you know what's going on, you'll know what to do.
Yeah. So, he always came back to those simple little, easy to understand things.
Isn't that what we need as human beings? Simplicity is simplicity is a virtue, right? So is brevity, clarity.
As long as it doesn't sacrifice clarity, because I have had people in the industry who are like, well, all we got to do is make this more simple for people. And I just...
Oh, no. That's a dumb it down. Oh, my gosh.
Yeah, so there's a limit to the... It is simple, no question, and Nelson made it as simple as it needs to be. And it's simple without sacrificing clarity.
No question.
And yeah, we got just make it easy. Put the money in one pocket, move it over to another. There's more money there. Now.
I think you've done a good job conveying that. There is a construct out there, and we're not leaving clarity out at all.
Right. No, read the book, pay the premium. That's really all you need to do.
And live free and independent.
Yeah.
Control the banking function in your life.
That was a whirlwind. I got everything I wanted to say. You got anything you want to add, James?
I could go on, but no, I'm good. I had fun.
Cool.
Thanks for listening. And hope to see you next time.
Yeah, we'll see you next time.